Hi everybody. Right, let's get right into the weekly essay here. Russell here, and let's get into it. So first thing first, I'm on the Viewers tab here, Viewers Home, and I'm going to click on Watch List Viewer. Here we go. And from here, per the drop down, I'm going to select New Group, and I'm going to give this new group name here, put it all in capitals for the letters here, Banks. There we are. Selecting this group, same deal again. Now I'm going to select New Watch List. And over here, let's call it Banks again. There we go. And from here, we're going to populate the watch list. I want to put in the top 5 biggest banks by market capitalization in Australia. So CBA, WBC, NAB, ANZ, and MQG.AX. Enter. There we are. So we'll fire it all up. So when I mention market capitalization, you can scroll out to the right here, you'll see market capitalization. It's the number of shares multiplied by the share price. That gives you the market capitalization. So if I sort the banks by market capitalization in terms of the biggest to smallest, there we are, CBA at the top, and at the bottom there, Macquarie. But it's quite interesting, ANZ and Macquarie are fairly close now, and ANZ's fairly close to NAB. So they're pretty close, these ones here, but you can see Commonwealth Bank is a lot bigger than the others there. Okay, let's scroll back here. Let's sort by VST in descending order. So the top VST one here is Macquarie Group, best combination of fundamentals and technicals. NAB at the bottom of the list, followed by Westpac Bank. If we come down to the bottom here, price 50 versus 34 on the valuation. RVRS below 1, so our fundamentals are not that strong. Technicals not a very high number at 1.04. We'll need to look at that shortly. VST below 1. CI, the comfort index, well below 1. So this is not going to be a fairly smooth set of stocks. On average, it's going to be a fairly lumpy or lousy looking trend. We'll look at that shortly. Earnings growth rate outlook, negative 5%. Okay, if I scroll over here, you'll see dividend yield 5.21. A lot of us have bought the banks for their dividends, but you can see the dividends are under pressure. 41 out of 99 for the dividend safety rating. So not all that safe anymore, and the dividend growth outlook at negative 2%. So the banks are looking to shrink their dividends by up to 2% on current payout. We've just seen that with Westpac Bank slashing its dividends. All right, so here we go. Right click down the bottom, view watch list average graph. Let's bring it up, and you can see over here, let's pull back 5 years. So you can see the trend has been heavily down during coronavirus, in a bit of a bounce back. But this is interesting. If I put on relative timing, let's right click, change the style here and make it jump out just a wee bit more. Here we go. So you can see the technical's been holding steady. Coronavirus sell down, they've come back up, but look at this. They're under a lot of pressure again. So the technicals are headed back down, which means it's likely to see the banking stocks on average, these top 5 here, coming down. Okay, what about earnings outlook? Let's change this and make this an area graph here. Pull this back 5 years. Look at the earnings. Huge divergence there between the earnings and the price, or at least in recent times. So if we line that up, same date and time, effectively, if I change the style, make this jump out just a wee bit more. So you can see a big divergence there. So just need to be careful on the banking stocks here. Okay, price going up, but the earnings are falling away rapidly. Look at the net profit margin. So I'll change this here and just make this an area graph as well, just to let it jump out a bit more. So the net profit margin was cruising along very nicely for quite some time there. Around about 34, 35%. So for every $1 of sales, the banks were taking in over 30 cents in profit. So great time for the banks there, making huge profits. Very, very good margin there. What's happened in recent times? That net profit margins dropped down to 27%, right? So from the mid 30s down there to 27 odd percent. If we look at the sales over here, now sales have picked up to help in the shortfall on net profit margin dropping away, but you'll see here they haven't they haven't really picked up all that much. If you look at that over here, sales of 26,854, this is in millions, right? So 26,854, they're currently 30,822. Compared to your net profit margin, which has come in, in recent times at 35, all the way down to 27. So your net profit margin has taken a bit more of a hit. Remember that this earnings per share, it's a 12-month leading forecast on earnings. All right, so the outlook is not looking all that strong at the moment in terms of what we're seeing over here. So we do need to be careful on the banking stocks. Let's close out of here. So here's a trick, right? So graph your first stock here, and where it notes stock, change it so it says performance. So if I bring this up here, here is Macquarie, and you can see against the financial brackets, banks, industry per se, or sector, right? So you can see how it performs compared to it. But what I'm going to do is I'm going to put MQG there, and then I'm going to go in and put in CBA.AX. I'm going to go and put in WBC.AX, comma, NAB.AX, comma, and then ANZ.AX, and I'll press enter on my keyboard. Here we go. So here are all the banks, right? So I can put on CBA, Westpac, NAB, and ANZ. Let's pull it back 5 years. This is where it gets interesting. Who's been the top performer over the last 5 years? So this is a performance comparison. So you can see Macquarie Group has been the standout performer. Let's change the style just to highlight it. Here we go. So there's the standout performer being Macquarie. And then it's followed by, it looks like, yep, that's CBA. Again, you can come in here, right click, change the style, so you can make it stand out, make it a different color altogether. I could make it a red color, for example, make it jump out just a wee bit more. There we go. Right, so Macquarie followed by CBA. That's over the last 5 years. What about over the last year? Right, so these are performance comparisons. So we have a common starting base. Everybody is starting off on an equal base, and then this is the performance in percentage returns. Okay, so you can see how they performed relative to the others. So if you held Macquarie, right, you'd be a bit shy of 10%, but if you've gone down to the bottom here, you can see down the bottom here, Westpac Bank, you can see it's pushing, well over negative 30%. It's negative 38. See there, if I hover my mouse over here, you can see NAB, negative 34, Westpac negative 38. Okay, for example. So you can see Westpac Bank has been under a fair bit of pressure over the last year. It really has not performed relative to Macquarie, relative to CBA. Okay, so it comes at no surprise that Westpac Bank are taking measures to improve its balance sheets, for example. Now, if I close out of here, and I come back to Westpac Bank and I graph the selected stock here. Here's Westpac Bank. Let's bring it back just a wee bit over here in time. Look at that. The earnings have been under a significant amount of pressure for quite some time. Net profit margins have been under a lot of pressure for quite some time. Credit to Westpac Bank, they brought up the sales, but the sales have not been enough to offset the drop in the net profit margins. You can see over here in recent times, net profit at 26. Now it's all the way down to 16. Okay, sales on the other hand have come up from about 31,900 million to 35,800 million. But there's another telling indicator I want to show you as well. Earnings growth rate, negative 6%. So the outlook there, negative 6% on the earnings growth rate. And that there tells me a lot. So you can see not only is the net profit margin falling, but you're seeing a negative earnings growth rate. You can see why Westpac Bank is doing what it has to do to cut its dividends. And herein lies an important lesson. If you're going to buy into companies for their dividends, make sure that those companies have got solid rising earnings behind them. And make sure that the relative safety scores are nice and strong. And you can see over here, relative safety here, 0.92, not that great, right? A relative safety score above 1 is what we're after. Now, if I turn all these off for now, let's put on the final indicator I want to show you here, relative timing. And I'll make that an area graph. You can see the technicals fell away here leading up to coronavirus. And then in recent times, You can see how the technicals have come back up, but look what's happening again. Lower and lower highs. One would certainly have to be fairly bullish and have a very strong conviction as to why they'd want to buy Westpac Bank now in the current circumstances in terms of what we're seeing in front of us. So as always, use VectorVest to guide you. This is not to be seen as financial advice. From what I'm seeing here, technicals are fading and fundamentals are under a lot of pressure. Again, as I noted there in the weekly essay, both Rob and I note there, it should come as no surprise that Westpac Bank has cut its dividends. You cannot continue to have falling earnings without some repercussions. And that wraps up the video for the week. Hope you enjoyed it. Bye for now.